If you've ever wondered why price suddenly stops, reverses, or struggles to move higher, the answer is often support and resistance. In this video, I'll show you how to identify support and resistance zones with TradingView and how you can use them to find better trading opportunities. What are support and resistance? Support and resistance are areas where price has reacted before. Support is an area where buyers have stepped in and pushed price higher. Resistance is an area where sellers have stepped in and pushed price lower. Because traders remember these areas, price often reacts when it returns to them later. As you can see here, we have strong support over here, and then it finally gets broken down, and then we have the two resistance areas here. And this happened over the course of 5 months, from January all the way through to May. Why this matters? Well, support and resistance can help traders identify potential turning points. And this helps you plan entries and exits, find breakout opportunities, basically manage your risk more effectively. And many trading strategies are built around these levels. How do you draw support and resistance? I would like to make it very clear that you do not want to draw an exact line. You should think of support and resistance as zones. Here's how I would draw support and resistance here. I have my chart. On the left-hand column, in the second top button, I click on it and then I select the horizontal line. And in this chart, I can see there is a support level over here. We have the two bounces and this one came close to the support level. I can also see another level here. So basically, we have a support here, the support got broken down here, and then the support becomes a resistance area. So it was a resistance all through this period until finally the resistance got broken above, and then it became a support again. I want to stress that the support and resistance are zones because price rarely reverses at the exact same level. So small differences are normal, as you can see in my example. It's never a straight line, it's always a zone. One important concept, which I have just shown you, is that when the support breaks, it becomes a resistance, and when the resistance breaks, it becomes a support. This concept is often called a role reversal. I want to talk briefly about fake breakouts. Support and resistance zones, they are not perfect. And what happens is that sometimes price briefly breaks above a resistance, like you can see here, or sometimes it's below a support. But then what happens? It quickly reverses. These are often called fake breakouts or false breakouts. This is one reason many traders wait for confirmation before entering a trade. So simply going to a support and resistance zone is not enough. A confirmation is a secondary signal that you can actually take action on. One of the biggest mistakes is drawing support and resistance on a very small time frame. For example, 3 minutes, 5 minutes, 15 minutes. I have found that higher time frames often provide stronger levels. So what I would recommend is going to the 4-hour charts or the daily charts and drawing in your support and resistance based on that data. These levels are watched by more traders and often have a much greater significance. You can identify major zones on higher time frames and then zoom into lower time frames to look for trade setups. To summarize, the best support and resistance zones often have multiple touches, strong reversals, large price reactions. The more times a level has been respected, the more attention traders tend to give it. If you'd like to learn more TradingView tutorials, subscribe to my channel. Thanks for watching and I'll see you in the next video.